Welcome to Building Toronto's Skyline, a podcast exploring the current state of Toronto's condominium industry from a unique construction perspective through engaging and entertaining podcast interviews with the many stakeholders in the industry. This podcast is brought to you by Fusion Corp, a construction management company. Here's the founder and CEO of Fusion Corp Developments, Inc., and author of Building Toronto Skyline, the host of this podcast, Nick AInis.
Great introduction, Mike. You're getting better and better all the time. Thank you so much.
I practice often.
By the way, I'm live from Cartagena, Colombia. We're bringing some investors back to Toronto. What can I say? But you got to pay on time. That's the only thing.
I love it.
Just kidding. Chris, you have nothing to worry about. Mike, we have Chris Minor here, Vice President of Real Estate Finance. Chris is from CMLS. It's a big company, mortgage company. He's the Vice President of Real Estate Finance, and you're a mortgage agent level 2. So Chris, welcome, and thank you for coming to the show.
Well, great to be on, and thanks for having me.
Yeah, so I did a podcast because I love talking to people and I love learning more and more about the industry. The Greeks, I'm Greek, so the Greeks like to philosophize, and the old ancient way of learning was through debating. That was a great way to learn and to get new ideas. So I love doing this. And you and I have been recently working together on a few projects and really have enjoyed working with you and learning all about the apartment rental industry. And that's primarily your focus, if I'm not mistaken. Is that correct?
Yeah, that's correct. That's probably about, I'd say about 70% of what I do. There's other asset types we do, but given sort of today's climate environment that is right now the hottest and the one product that is working out the best, being the most successful for investors.
I think so. And Chris, you're an expert in all income producing assets with a particular focus on multifamily, industrial, and retail. You've been working with income producing owners and developers across Canada. You have an extensive experience in commercial mortgages, including working with many companies like Alterna and First National LP. I think I saw that on your LinkedIn profile. You also hold a Bachelor of Commerce from the University of Toronto with a major in economics. And like we said before, we recently got to know each other working on some potential projects in the multi-unit residential rental industry. And you work for a great company called CMLS, which was recently purchased by Nesto. So can you tell me a little bit about the company? Because it appears that CMLS has been around for quite some time. And I did a little bit of research here. It's been since 1974. And to put things in perspective, I was born in 1973. So I'm 1 year older than CMLS. So
well,
go ahead, Chris.
It's a great company. So maybe I'll just give a little backdrop on the company, who we are, what we're about. But again, it's been my longest sort of tenure at a company. Thanks for pointing out, sort of spent some time at First Nat and Alterna. But the reason I love this company is it's a big company. It manages, multiple billions of dollars. We're talking 40 plus billions of dollars on behalf of, pension funds, life insurance companies, wealth management companies. So what we are is sort of like a US style mortgage bank, but as we grew, we never lost the small sort of company feel. It's about customers first, recognizing what's most important for them. And that's the reason why I love our company. And again, customers first, and obviously making sure that we mitigate and, all the sort of risks that come with the different risk tolerances with the different funds that we manage. So we act as a lender capacity, originating the debt, underwriting the debt, servicing the debt on behalf of multiple sort of different funds. Then we have the ability to take on a bit of that advisory role. So again, if a client is sort of looking at different things where they want to look at the funds we manage, but let's explore the market. We have that ability. And just when that's all exhausted, I think, Nick, this is where you and I initially met, was just that sort of advisory side which is, you know, fairly new, the last 4 years. I call it the think tank group. If someone's got a challenge with the, you know, site, not necessarily debt related, but, you know, looking for capital, looking for partners, sites maybe being repositioned, ownership structures that are being, you know, looking to be sort of converted, being more tax effective. So it's the think tank group. So this is the beauty of our company. And as we continue to grow, we add technology, partners like Nesto. And maybe I'll stop on that note. Like I could talk probably the whole podcast how much I love the company and why I'm still hanging here. And I'm sure you can tell the excitement how much I love it.
Well, you definitely I can feel that excitement. Both Mike and I can feel that over the internet here. It's exciting, and I think the acquisition was so Nesto bought CMLS. Is that correct? Do I have that right?
So they had purchased majority interest in the company, but who we are as a company is not going to change. Again, they bring in technology, different capital, but they made it, you know, we sold because we're looking for a great partner, someone that would, you know, obviously, you know, add to and complement what we do already. So that is also excites me. It's what do they say? It's just more options, more ideas. So it's been a great partnership.
And excellent. And I understand there's probably around 1,000. This is what I read off the website. There's 1,000 employees across 10 offices across Canada and over 60 billion in mortgages under administration. Do I have that right?
That is correct. So I was under quoting earlier. You know, that's me, the humble guy.
Okay. Well, I hope maybe you got it right and I got it wrong.
No, you got it right. You did get it right.
Okay. Okay. So I did notice that about you when we met. Like you really, I've never seen, well, I mean, there's a lot of people in the industry that are very passionate about their work, but you are especially, and I saw that you really do care about the big clients, the small clients. You're there to help to facilitate some kind of a deal, but you must spend a lot of time doing that. And do you feel somewhat? I think that speaks to who you are as a person. If I'm reading you correctly, you look like that kind of person who really wants to help others. And I recognize that about you, and I thought that was pretty honorable. And but does that? I mean, it must take a lot of your time up by wanting to help so many people.
It does. It does.
Did I get that right?
Oh, nail on the head. Most days are quite long, but again, I'm happy to, again, big picture, do what's right to others, and, you know, simple values. It goes back to our company's philosophy. You know, most employees at our company kind of operate and feel the same way, that take the time to care. So every deal, every owner is important. So whether it's a small single owner of one asset to a pension fund that owns a portfolio of billions of dollars, everyone is treated the same way. And yeah, it's long days, but it's rewarding when you feel end of the day you've solved the problem. I'll be honest, it's a bit of a high when you know that you've made a change, you've made a difference, and then someone, you know, is grateful for it. And that's where I find my energy.
Excellent. And so you went out of U of T, you graduated. Did you go right into the industry after you graduated, or did you take a few sort of shortcuts somewhere else? Or
I took a couple twists and turns. You know, I grew up, you know, small developer, family related, you know, infill, sort of West End, you know, Hyde Park, Junction, Etobicoke, you know, redemising single family units and, you know, turn it to multiplexes, or taking, you know, maybe 2, 3 and turning it into apartment buildings. But that's what I grew up with and went to school, and wanted to add to it. So, you know, my first job was with MPAC, with the city, and reassessing when they went amalgamated. I was part of sort of the commercial side that looked at the special single-use assets. So that's where I cut my teeth and a little bit when I graduated. Love the front end sales side. So that was more of a back room sort of credit. Went, factoring receivables for a period of time because I love the whole sales thing. But I missed real estate. So that was a short stint, and I missed real estate, and connected with Maury Taz at First National, and who was a West Ender as well, and the rest is history. Landed there and fell in love again with what I enjoyed growing up with, which is real estate, but it was on the debt side, and the rest is history.
Well, the three of us share it today, and even Mike here in the background, he might speak. We'll see. We'll hope not, but he might speak.
Hey.
And we're all West Enders. Actually, I was born and raised in Etobicoke. I went to Richview Collegiate. And so we're all fellow Etobicans here.
Oh, I love it. Love it.
Shout
Mike,
out to shout out to Il Paisano, best pizza pie in the neighborhood.
Okay.
Agreed. It is a staple at the house.
For sure. So now tell us a little bit more about your specific role at CMLS as VP of Real Estate Finance, because now you're working with a very specialized segment of the mortgage market and facilitating CMLS and CMHC mortgages. So could you tell us a little bit about that?
Sure. Yeah. So, my job is a frontline individual, connecting with developers, borrowers, different pension funds, that are looking to source some sort of debt. And again, as our company evolved, it's changed where now I'm not only sourcing or helping, help them with their debt solutions, but if they have other challenges, so whether it be they've got an asset looking to JV. So a big part of my job is front facing, sharing a little bit of what we do and listening to individuals that own these assets. Again, so whether it's the single owner individual to a pension fund that is managing a portfolio. And, my job is to get in front of them, understand a little bit what their needs are. So whether it's debt related or other. And in conjunction, I've got funds that I've got to sort of, manage. So as you speak to these individuals, you're sort of seeing what's best for them. And then that, as they share a little bit of what their short-term or long-term needs are, in the back of my head, I'm always thinking which fund to put them with, understanding the nuances of every deal. Like every deal is unique, and my job is to understand a bit or a lot about what is important to the property owner. End of the day, like what are we looking to get out of the debt? And
you work with probably large firms and also small companies as well.
That's
small
correct.
Individual companies, private companies.
Yeah. And when it comes to the larger funds, it's a little more complex when you're dealing with them where, they have a portfolio of assets and, I'm there doing portfolio reviews for them, looking at all their assets, looking at the debt in place and trying to understand what returns or what they're looking to gain out of the fund and provide a bit of an advisory perspective. They're going, the debt they have in place, this is what it can do. And then again, through their conversations, what are they looking to do with the fund? You look at the assets and help them maybe redeploy the debt differently, structure it differently, whether it's internal with CMLS or external. Again, client first, understand with the larger funds, it's exciting and fun because you're looking at a portfolio and you're kind of trying to reposition their assets or help them sort of structure it and maybe provide advice if they have certain debt options they've never thought of and to try to help get what they need out of their investment, which is it's the real estate. So
that's good, very exciting. And right now there's a big shift in the market because from what I've seen in the condo market these days and versus the rental market, let's face it, condo market is essentially almost dead right now. There's a lot of developers that I am hearing, and we're seeing just rental properties these days. They're taking their properties that were proposed as condos and changing to rentals. So how do you see the market right now? What do you see the future of our condo market, although you may not be specifically looking at the condo market versus the rental market? Tell us a little bit about that, your market outlook.
No, sure. Fair enough. So Spot on. There's been a major shift from condo to apartments. So, there's developers have, acquired the site, rezoned them, slated for condo, and then the market just shifted and turned on them. So some developers have the ability to sort of wait for the market to turn, but this market's going to sit quiet on the condo side, and when speaking with the developers, that timeline is ranging, again, depending who you speak with. It's sort of anywhere between 18 and 24 to 36 months where they feel it's going to take that long for sales to come back, for that activity to come back. And this has forced landowners that were slated for condos. So again, it's to build these units, but they can't sit on them. So they have to repurpose it somehow, extract or you pivot. And the easiest pivot now has been, and the most logical pivot has been to turn to apartments. Now, that's been a product, why that's happened is CMHC debt has allowed that the cost at the end for the term out to be cost effective. CMHC has changed their policies to help developers make it cost effective to develop by the cheaper debt, structuring, higher sort of loan to costs, being able to sort of reposition. And there is a huge federal sort of push for housing. And we all can agree here that there's not enough housing, not enough affordable housing and housing period, where, some of the stock is tired, but there's not enough. So the development of these sites can't stop. So hence why CMHC is come up with solutions, which is what keeps us extremely busy, and it's kept us busy. Looking at the different types of debt options that CMHC can provide. And, we have the ability to work on all that. So again, the market, I think is going to take some time for that condo market to come back. And if things pencil out, and that's where I come in, you look at the site and try to see if we can pencil it out to make sure that it makes sense to make that transition from condo to apartment and help sort of those sites move and keep developers going.
Yeah, and we see that we're construction managers, so we went from one day doing all these condos or doing construction management proposals for condos, and now we're doing basically all rental buildings. So we went from one extreme to another extreme. We had to pivot as well, and we have some pretty exciting projects, I think, that are going to come out of this. That being said, one thing that we've noticed and we're hearing is that not only are the sales of condos going down, but a lot of the applications for new condo developments are also down. And I'm not sure, do you have anything, in terms of rental properties, I'm pretty sure that's probably going to be the same thing. But have you heard that? Have you came across that? The applications are coming down significantly. And so we weren't going to have that, we may have a rush of rental units coming right now due to the pivot, but have you heard that maybe perhaps the since we're not applying for a lot of new rental buildings or condos, that perhaps we're going to be having even more of a shortage? Are we looking at more of a shortage? What is your opinion about that?
Well, I think, yeah, there is going to be a shortage. I mean, it's hard not to argue that. So sites that are zoned, close to zoned, they're pivoting, right? They're making the math work. Sites that are maybe further along in that process to sort of rezone them, I feel those projects are holding off, hoping that maybe that market turns around. So what's going to happen is that condo market's going to, like you said, it's going to stop. Some projects are going to pivot and pencil out very well for the apartment to sort of solve some of that sort of housing crisis. But what's going to happen in 24 months when the market turns, and again, this is a guess, is it 12 months? Is it 18 months? Is it 24 months? When it does turn, there's going to be a huge supply shortage when it pivots and turns. And then, as you know, going through the process, it takes time to sort of rezone those sites and go through that process and to properly do it. I fear there's going to be a gap in the coming years.
Fair enough. I probably would agree with that statement. And so I think we're going to have maybe a shortage coming at some point, and then it'll take some time for it to come back
And then it'll
as
be a
well.
different scramble, and it's going to take time. And I think, right now that pivot to apartment makes sense, it pencils out. But as soon as I think the condo market comes back, I think then, it'll be a split between whether it continues to go apartment or does it pivot back to condo. And then the individuals that have been sitting on the fence sitters, are going to jump back in quickly. And then, unfortunately, it's a long process. So, which is going to sort of hurt that supply, because it's going to take 12 to 18 months for some of those sites to go through the process. As you can, I'm sure you can attest or confirm that, it takes time to turn them around, the rezoning process.
So you have a rental construction financing programs available. I'm going to list them off here. This is something that you kind of gave me a sort of a summary of some of the programs that are being available. So market mortgage loan insurance, MLI select loan insurance, rental construction financing initiative. That was formerly called the RCFI. That's through CMHC. It's now replaced by the apartment construction loan program, which we, I guess, use the abbreviations ACLP. If I'm not mistaken, the enhanced apartment construction loan program was launched today. Is that right?
That is correct. So there are lots of options for developers. Again, that push, that sort of, federal, provincial, municipal mandate for housing, and with the help of lenders and CMHC directly, they're trying to find different avenues and platforms to help encourage these sites that have the density, that have, maybe been slated for condo to pivot to apartments. So again, they're trying to find solutions to fix a bit of that housing crisis. And again, we have the good fortune to understand all the programs. And again, so we look to the clients, and every site's unique, so listening to the borrower. And that's the one thing, again, I'll go back, where CMLS does a great job, where maybe others will focus on a lender-based platform. So there's, the three there's three. So you got your conventional, you've got the CMHC sort of standard, and then you've got that MLI select on what you spoke about. So those are lender-based platforms. And most lenders will just focus on that. And they don't really talk about that ACLP, or obviously the new one, the housing initiative that has been, launched today. And we focus on all the platforms. And this is why I think what's kept me busy and the company busy, where I'm trying to explain all the platforms and make sure the best interest is of the client end of the day, right? Do enough good to others, and it comes back in different forms. So, and that keeps me extremely busy. And again, I love finding solutions. Nothing makes me happier when someone has found a solution and you've made a difference. Whether it's a massive fund that has individuals that have invested in a pension fund, still, or is it the one unit, or the one sort of apartment operator?
Excellent. And you do as many as like maybe 4 units or something like that, or 4 to 6 units?
So anything that 5 units and above. So 4 units falls
5 units and above.
Sort of that single family side, which we also have a single family group that would look at those 4 plexes and less. My side, on the commercial side, is sort of 5 units above where it falls into.
5 units and more.
Yeah, we will look at those as well. So whether it's construction or term, again, or again, and then look at the solutions, whether it's conventional or CMHC insured. So
sounds
every
good.
project is unique. Every project has different nuances.
So I just had a quick question. So what was the enhanced apartment construction loan program? So it launched today. What is it? What's the big difference for the enhanced apartment construction loan program? Can you tell us?
So, a lot of similarities to the ACLP. There's a lot of overlap between the two different programs. And again, there's sort of CMHC federal money. So we're just being brought up to speed right now. So it's we haven't been given all the information on that program. So I think maybe on the next podcast, I'll be able to share more on that one, but it is supposed to complement the ACLP program.
Okay. So Mike, you just said he's coming back. So
we'll do it in person next time.
If you guys are happy to, I would gladly might come down and visit because.
Well, we're gonna definitely do an in-person one, but definitely I wanted to get you in on the books here because we want to always have exciting guests on our show. So, in addition to that, so let's move on to a couple of other things here. So, you look at a condo. So look at Fusion Corp, for example. We have done primarily 98% of our projects have been, condos where you're buying and selling. It's a very simple pro forma that we use. You have your land costs, you have your hard costs, you have your soft costs, you have the revenue side, you have all your development charges and whatnot, and ultimately you have to sell at a profit, and it's got to be at least 15 to 20%. Otherwise, the projects never get funded, and you get revenue is based on what you can sell at, based on market comps and this and that. I'm sure it's the same for rental, but it's a much simpler pro forma that we're used to, and we're learning more and more because you're teaching us how to do that. You did a lunch and learn at Fusion Corp, which was really amazing, and you took your time to come out and see us and talk to all of our employees. And, you ran through what we call a sizer, and I understand that's a loan sizer, or financial model to determine your loan amount for a property based on its financial metrics and the lender's criteria, primarily considering the net operating income, so net NOI, and debt service coverage ratio, DSCR. So is that the sizer? Did I sum it up? I looked this up too on the internet. So
you summed it up extremely well. You're an expert. So all it took was one meeting. So again, I can have you in the bullpen in the office. You've summed it up quickly. So well.
Well, I'm getting there. Slow. Well, we learn from the greatest and the great. So you're a goat. You're a goat. We like to call you a goat. So
nice. Greatest of all time. Love it. But yeah, you've summed it up well. It's a little different than the condo, like you said. There's you've got your sources and uses. A little it's different. While here you're looking at cash flows and revenues and an operating expense of the asset and seeing what that pencils out in terms of net operating income at the end, and apply a market rate which determines your sort of loan value. And again, going back to the beauty of CMHC, where conventionally, you may have been only able to get a 25 or 30-year amortization. CMHC can get up to 50 years, which allows now to make these projects work. So that loan to cost moves up, and all of a sudden those returns look better, and you're able to sort of redeploy that money elsewhere and into more projects. Now, the returns, again, on apartment are not quite like condo, where, condos, as you mentioned, it's mid-double-digit returns is sort of the expectations, where on the apartment side, it's typically, the mid to high single digits, but as you start looking at, when you start factoring in the principal pay down later years, and you sort of look at a longer sort of timeline, it does get into those, lower double digits, but it's an annuity. So this has also been a great appetite on developers, where on the condo side, land is finite. When you look around Toronto, there's only so many sites you can sort of, acquire at a price that makes sense to redeploy it. You understand the costs, and then the sales are sort of capped on what you can get in terms from the market, where the beauty of this pivot is allowed a lot of these developers to maybe build an annuity, a cash flow for the development arm, to allow maybe to sort of continue differently in terms of the fund wealth or the family wealth.
Yeah, it's a revenue stream, for the family fund, or if it's a private development firm. But there's probably a lot of pros for changing the model. And but I guess you got to change with the market as well. You have to be adaptable to the market.
That's right.
If I broke it down, I saw in your sizer you had a rent roll. You start off with your rent roll, your budget, sources and uses, and your residential OS and your non-residential OS. So I understand that's your operating statement. Is that right?
That is correct. Yeah. So you've got your multi-family units, your apartment units, and then you've
Yeah.
got a lot of sites, depending on where they are geographically, are having ground floor retail or maybe ground floor retail with second floor office again. So again, depending on where the site is and what the community commands. So every site's unique and some are apartments for its entirety and some have a mixed use. And the ability, maybe I'll just sort of touch on that. So these mixed use sites, as long as the split is sort of 70-30, where 30% of the commercial piece, that's where it's capped. Anything once it goes beyond that, your financing gets limited and you end up having to, only have one option being conventional. So this is where, again, chatting with investors and borrowers, understanding what they want out of the sites and understanding sort of those nuances. And that's where, chatting with someone like myself early and yourself, when you start talking
Yes.
about sort of demising the space is really important. So I think getting in front of people early is important to help them
I agree.
site expectations. So I think you and I are working on one right now where it's just, again, you have to tweak the site, you change the floor plan to make sure that that operating revenue is maximized. So, on a condo site, your suite mix is different, right? You're looking at end users that may want larger units because they're maybe housing more than just the couple. There's kids, there's parents. Larger units is quite important in different suite mix. When you get to the apartment side, it's smaller units make more sense because those are the demographics or individuals that you're focusing on, right? And so the suite mix may change slightly, which you've been a great help on a few of the sites we've worked on. We're helping work with the borrowers, understand what I could talk the revenue, but you're the one that's going to talk about the costs and what that means. So, working with a floor plate early and breaking that suite mix is huge in making these projects work.
Yeah, we think that we always advise that to our developer clients that it's always best to get us in early on in the game because there's a lot of design considerations, especially for, making the most efficient building at the end of the day. Getting the suite mix right at the beginning is important. Working with companies like yourself, considering where and how this is going to get financed later on. And that's why it's good to have a good team in place and get in on the ground early. And yeah, it's pretty exciting. So do you have a lot of developers? I guess you deal with so many different developers out there. Some of them are they've got this, they've got the knowledge of the apartment rental market. I think I heard a few developers at the housing summit for ResCon. I don't know if you attended that one, but there's a lot of very sophisticated people that have been or developers that have been in the rental market for already quite some time. So I guess how do you feel these developers, basically the ones that are more pivoting, they're more condo developers, are they having a difficult transition from one to the other? Do you see that happen? Are you educating them on that? I'm an example of that. So go ahead.
There is an education again. So, the condo developers seasoned are also having to sort of learn the difference, the nuances. Again, there's slight nuances where they can build a great product. They have great history. They have great experience, but there's slight nuances, the difference between, sort of the condo and the apartment side, which I think we briefly touched upon earlier is that floor plate changes where the suite mixes change, where you may have sort of smaller units in an apartment. But when I say smaller units, you have bachelor's ones and maybe a sprinkling of twos versus maybe a condo. It's got the majority 2 bedrooms with sort of 1 bedroom and dens, and then, the odd 1 bedroom and some 3 bedrooms. So changing that.
Believe it or not, the condos, they're not so much different. I guess the challenge now is that those investors don't exist too much anymore. So now we're looking So now we're looking at a new mix for condos. Will it be a new mix for condos?
And that's a great question.
Probably will.
The end users and demographics may be different than what they've been historically. The condos have been investors, and there's still nuances between the apartment and the condo, but I think you're going to see maybe a bigger difference between what a new apartment, is sort of that floor plate, how it's demised versus where the condos, again, given the demographics, is it going to be investors that are going to come back into the condo market? Or is it going to be end users that are looking to, maybe have larger units, more bedrooms, because this is going to be a permanent space. It's not a transition. It's more of a permanent space. It's a lifestyle change. And, it's so great question. I don't know the answer, but I get a feeling those, given sort of, policies of immigration, I think that's going to play a big factor of what that means. I think, the demographics, who's going to be acquiring the condos is going to change. And I think it's going to be education, a re-education for all of us. What are the demographics that are going to acquire these? But even the most seasoned developers, I have to sit and chat and talk about that floor plate and what makes sense. And it's those tweaks. And it's even as simple of what are the finishings like? Durable versus aesthetic. So if those are all important questions, and efficiency, all of this comes into factor. And I think you've been, again, a great resource. I'm watching you work with some of these developers, just, walking them through the tweaks that I make, what that means to their project in terms of cost. It's one thing for me to talk about redemising that floor plate, but you're the one that's going to say, well, that every move means a cost. And understanding what are those little differences mean, and even just on energy efficiency and accessibility, and I talk the numbers, but you're the one that's you're the glue that makes it work.
Well, I think you're the glue too. So I guess I have to pay you after this. Is that how it works?
Yeah. Well, you're kind of
Mike,
payment there.
Well, you know what? You just have to talk to Mike about money. That's all. Okay.
There we go.
Mike, still there? Or you?
Yeah, I was gonna say maybe you pay me and I'll give some money to Chris.
Yeah. Okay.
Love it.
It's not gonna happen, but okay. Well, that's great. Tell us a little bit about the future of mortgages. Where are we heading? Where's CMLS heading? Your parent company or your new partner in the industry, I guess it's Nestor, right? Is that Nestor, right? Yeah, Nestor. What do you see? Is there something new and innovative coming to your field, or is it more of the same? What's new and exciting in mortgages and financing? So tell us a little bit about what you see as a future here.
Not going to be major changes, but what I do see is technology playing a little more of a factor. When I say technology is being able to sort of adopt, move files quicker. I think as new capital starts to get deployed, new lenders coming into the mix, again, we have the fortune and pleasure to, I feel like every year we're adding one more new fund, which means one more maybe nuance that we can sort of, offer to individuals. So I think what you're going to see is more choices being available, but, nothing major earth shattering. So I think, there'll be more options and sort of how to sort of maybe structure your debt. I think, the technology is going to improve how information is being exchanged. And I think those are the major changes. I'd love to see something more earth shattering, but there'll be some novel moves. But I think what you're going to see is technology will play a bigger factor, and then that's more of that information exchange and be able to process things quicker, and then slight nuances. And I think groups like ourselves are going to evolve and add more. So when I say add more, sort of what we did with our advisor group, and be able to add sort of that, top of the capital stack. So someone phones us as a lender, starts off with debt, and then we start talking about, well, how do we make your platform more efficient? So does that mean, tax, wise? So do you change your borrower structure? So I think those are the changes I think that are going to come more, where it will be more of a one phone call with multiple options being thrown to someone, and it's more than just the debt. So I think it'll become more personal.
Okay. And do you see, maybe I was thinking that you said technology, maybe AI will play more of a role down the road?
Yeah, hard not to see that not coming into play, and maybe those, initial, which I wonder, those initial calls and feedback, again, goes back to quick turnaround, where AI will be able to sort of address maybe quick, easy questions, whether it be via email or through phone calls. But I think it solves some questions, but given the nuances, you got to wonder, AI is not going to be able to solve all that, sort of that human interaction and really understanding the information, the nuances. I think quick, easy questions, fast answers for simple questions, that will be available through time and through AI and other technology. But I think this is still a people business where, that face-to-face interaction is huge and important.
Well, I'm hoping that maybe that AI takes over and we could be on some beaches in Colombia.
That works for me. I would love that. Nothing would make me happier to work on my tan.
Mike wants to be in Colombia. I know he's been talking about it.
I'm on my way to YYZ right now.
Oh, nice.
Okay. It's in Etobicoke, close to Etobicoke. Okay. So, I guess the future holds, there's a bright future for rental housing. And I think you really nailed all the main points there, Chris. And you have been a fantastic guest. We're going to get into more details later. You've already said you're going to come back. So now we just have to find out where you live so we can pick you up.
Well, I'm looking forward to visiting Mike, knowing, how close he is to certain, venues. Breweries, yes.
You know what? I'll put a premium lager in the fridge for you. So when you come,
sold. That's all I need. That's just
we're gonna meet at the brewery. What are you guys talking about? So listen, you've been a fantastic guest, and we always ask all our guests if you're gonna somehow, some way sponsor our podcast. I'm sure a company like yourself would be happy to do a small thing for our little podcast here. Little, but it is fascinating and interesting, and we're here to learn about the industry. We're here to talk to great people. And Chris, you've been such a fantastic guest, and it's an honor getting to know you. It was great to interview you, and I had such a informative time here today on the show, and really appreciate everything.
Well, Nick, again, I appreciate you, considering me to jump on the podcast. I appreciate the kind words, humbled, and I look forward to the next one. And thank you. Have a wonderful weekend, and
I'll be at the pool thinking of you guys. Okay.
Awesome.
Thank you. Oh yeah, Nick. I'm. This is my favorite part of the show when I get to do the big outro.
Yeah. So you know what? I'm butting out here. Okay.
That's why when you're in person, I can grab you, but you're in Colombia. So thank you for listening to Building Toronto's Skyline, a podcast exploring the current state of Toronto's condominium industry, proudly brought to you by Fusion Corp Developments, Inc. Please share, like, and subscribe. See you again in 2 weeks.
Thank you, everybody. Thank you, Chris.
Thank you.